So, new week, so it's time for a new video. We have been in this local range during the weekend. So check my former videos if you want to know the higher time frame analysis. But just very quickly, we are in this range from low to high, where last week price took out that range high with a shallow SFP, and then price moved lower, in which price has been accepting back in the former value area right here. And then this week, or at least this Monday, we had a weekly open push higher and a rejection for now. So for me, this move above and that rejection from that value area is a very important level. As long as we stay below that, for me the risk is, or at least it's not the risk, but I think we can then trade lower towards these sell side liquidity created there and sell side liquidity located right here, and all that easy liquidity right there, which aligns with that bad monthly open that we still have resting. If you don't know what I'm talking about, I can quickly show you that right here. Using the brighter data statistics, let's say the last 7 years of data for the monthly candles. Then we can see the data here. Warning, 93% of the sessions, like there we have it. Warning, 91% of the monthly lows form after January 1st, 4th hour. And warning, 100% of the monthly lows have a bigger wick. So that are massive warnings on the monthly candle, which is the candle that, let's see, January 1st. That's that candle right here. So in my opinion, pretty big chances that we will revisit that level somewhere this month. And if we look at it from this range perspective, we took out the range high, we accepted back in the value area. Normally when you accept back in the value area, you move from value area high, which is here, back to the POC and the value area low, because this is then a field auction. Another potential scenario is that price accumulates below the value area high, then gets back above. In that case, I would expect new highs. But for now, we have seen a clear rejection with that weekly open move. So let's zoom in a bit more what we had like locally during the weekend. Last week on Friday or on Thursday, we made the weekly low. And since then, a little bit of chop right here, in which price done basically nothing during the weekend with extremely low volume. So like what we can see is that we still had that structure pool, low, lower high, lower low, lower high, lower low. Then basically here we broke internal structure, and this was the 1 hour structure, which we SFP'd right there. But since internal structure broke back to bullish, you can say this is the new range that price has been in. That, let's see here, which got validated on that mid-range tap right there. And then on late Sunday, as I said, often Saturday is very quiet, and then later in the day on Sunday you often get some manipulation. And that's also what we had, because we first price came into this supply I had marked out with a sweep of that high, then price came back down. I had a little short opened, not a big one because it was very low volume and not a high probability setup, but I shorted it. I can show you it right here. We had that move up, move down, move up. So this was like a SFP of the high, like there. SFP, but there was no good structure to confirm a break of structure until this level right here, because this is the last low that brings you into that new high. But yeah, breaking structure right there was not worth it. So in that case, I was looking at the move from high to low. So we had low, lower high, lower low, lower high, lower low. And at this point, I knew we have a local downtrend. So I opened a short right here, stop above that high right there. And then I targeted the range lows. But as we can see, before the before the weekly open, price made a low, high, lower low, and then right here it broke structure back to bullish. And at this point, my stop was at break even, so I got stopped out at break even. I was also asleep, so I don't like to go to sleep with risk on the table. So I woke up with that push higher that took out my short position. All good because, yeah, not any money lost. And yeah, now we can make new plans. So what happened basically was that we took out this high from Friday on spot buying. Spot was buying, and perps the open interest was declining. So it looks like during the weekend quite a lot of shorts had been built up, and with this move higher, all those shorts got liquidated, and price made once again a BART. Not the best looking BART, but it's still a move up with a full retracement. So a lot of people got trapped. And this was an early week move in which this is potentially already a strong weekly high, potentially a strong weekly P1. But because we also made a quite an aggressive move down, I'm also open to the fact that if price, let's see here, takes out the lows somewhere around here, that we could also form the early weekly low. So that's still a scenario I keep in mind. But for now, I'm leaning a bit more towards lower levels because we have these 3 stacking lows right there. And then you can basically say it's 4 stacking lows if you combine that range low. So like range high, range low. Range high got deviated right here, but price never broke out of the deviation threshold, in which you can say this is just a deviation of the range high. Often you get a move back to the range low. And right now price did that, but is now seeing a little bounce. If we zoom in a bit more, we can see that move higher, there was not really any good structure. Yeah, you can say on the 50-minute you had from the low up, this is 2 candles down. Oh, that's the wrong tool. You have low, high, 2 candles down, so this is your structure. So basically here price broke it back to bearish, and then we can see what did price leave behind. It's always a good question to ask yourself. There you can see this is where structure broke. So this is a supply zone, and then with a more refined zone is this is like structure supply, and then this is 1 candle before that structure that strong move down. So this is pivot supply, this last candle. So that are potential retracement levels to look for an extended distribution model in case price doesn't take the lows but makes its way up from here. But what I also see is that we have a block right there. So let's look right here, and I can say this is also clear because here you have candle up, buyers and sellers take over, leaving an imbalance. So this is also supply. So we have 2 levels of supply that the bears have to create a potential lower high for a lower low, which is for me now the main scenario to look at for today. As long as we don't take these lows. I've been talking about that liquidity in every video, and right now we are making even more liquidity because this low wasn't taken out. Here with another higher low and here another higher low. So basically even more sell side liquidity created while price is also creating supply, and there is not really any strong demand that I see. So yeah, for now I'm leaning a bit more bearish until proven otherwise. And then these are levels I'm interested in for potential fresh short place to look for. Last week's low, which is previous weekly low, is right here. But yeah, basically anything in this zone, if I get a structured move, so let's say price comes down, structured move down, and then breaks back to bullish, then I'm interested in longs, just playing this local range, because I'm seeing this like sideways price action, which means that I'm interested in shorts in premium and interested in longs in discount right there. So let's see what happens during the New York session, and then we can also make a better guess how the weekly P1 is going to look. So this is potentially our weekly high, but we can also, if we move down further from here, also potentially today form a strong potential low. So then it's going to be important which one is going to be the stronger one. And then for the rest of the week, we can determine what happens. So often we know on Monday, it's the most likely day to put in the weekly high or the weekly low. And then Tuesday is the second day. And then after that, you have your weekly bias. So let's say today, maybe we get the local short right here, comes down. And tomorrow we make a new low. Then we have P1 right here. We have P2 right here. And then the question is, which one is the stronger one? And if by Wednesday we take out either of those, so let's say we make a new low on Wednesday, right here, then you have confirmation that your weekly high is in and that it's very likely that you get bearish continuation. On the other side, if you take out the high by Wednesday, then you have strong confirmations that the low is a strong weekly high and that you have a bullish week ahead. So that are always things I'm looking at the start of the week. But right now, I'm leaning a bit more bearish until proven otherwise. And then for the bullish case, right here, 89K is a key level. We can SFP it, which means that you can come back for it and then take it out. But then buyers need to step in there because below that, there's basically nothing to protect by price because this is all just liquidity and there's not any strong demand or anything to look at. So yeah, either bulls step in here and push price back to the range highs and potentially higher, or I expect all this liquidity to be taken into the bad monthly open. So that's the plan for now. New York is in a few hours, and that's often where the real action begins. But for now, we also had quite some action during Asia and during London, which is not something you see that often. Currently, what are our pivots for the day? We have the high at hour 3 and the low at hour 10. Which means that the high for the day is most likely in. Hour 3 is a relatively strong hour. Hour 10 is a weak hour, so it's very unlikely that this low holds. So it's likely that a potential reversal I'm willing to place if we make a strong low during New York, get a breaker structure, then you could potentially say this is your strong New York hour, and then you can look for longs back into this supply where I'm then interested in shorts again, just playing this local range. But let's see what the stats are saying. For the day, we can see low P1 flip risk, 25% of the days took out a daily high. So based on time statistics, also unlikely that the high gets taken out. And based on distance statistics, 34% of the days took out daily high. So that shows that the high is a strong, pretty strong pivot. And then the current P2, here you can see 94% of the days form a new P2 after 10.55. So the current low is at 10.55, which shows that in 94% of the days, a new low will be made if the high holds and the current low is at 10.55. And based on distance statistics, it shows that 82% of the days moved further than min 2.3%, which is the current move from high to low, right there, 2.35%. So if we get a bearish day and this high holds, there is an 82% chance to make new lows. So that are some statistics. Then quickly, what are the TPO and this saying? Spot has early last week we saw a spot buying, which we marked the top, and since then spot has been heavily selling. Then during last Friday, spot buying picked a little bit up and is slowly moving higher. Nothing too significant, but at least they are buying more as they are selling. Perps going flat, slightly down, and open interest has been pretty flat. So nothing too much to see there. The TPO aligns with what I said. If we lose last week's low, there's basically nothing to hold price up till like this point of control around here, which was put in, which is at January 1st. So that's the monthly open. So that's also a point why I think we will take out that monthly open sooner or later, because we'll have also a poor low below it. On the upside, we have a daily point of control resting just above the high we made today, which is also a poor high. So yeah, also a case to be made to take that out. So gonna be interesting. More locally, let's see, price moved down from high to low. We can pull our structure like this. These are not two candles up on the 5, but on the 3 it is, and you can see that it's up, down, and a seller stepping in. So I use this as structure. Low, high, low. So current structure is this, and price. So then you can say, like, if I use a red line, that's a structure. So horizontal mark structure. So this is like the internal structure that's currently going down. Price made a shallow sweep of this low. So you could say this is your local range. Local range right there. Classic range. Reach your tap 1 at the lows, tap 1 at the highs. Sweep of the lows. So you could potentially look for maybe a Wyckoff in a Wyckoff, because here we have tap 1, tap 2. So potentially you can look for preferably making a new low, because we know current daily low is a very low probability low. So it's likely that we take it out. But if that happens during a strong hour, which is around New York Open, you get a breaker structure. Then you have a local model potentially right here. And you are in the extreme discount of this range. So it makes sense to look for longs. At least I would not short it here. If I'm interested in shorts, but that's only if we get back into premium levels. Currently, we are in extreme discount, so I'm not going to short it here. I'm more interested in potential longs here, back up to here, back down. That's the main plan for now, but let's see what is gonna happen. Here we had internal structure, local structure break right here, bullish buzz. So you can also look for potentially a model 2, in which this already makes its way up. Yeah, look, this is interesting. We have 1, we have 2. Then internally you had structure like this, which broke back to bullish right here. And then this demand slightly mitigated. This pivot demand was left behind, but that just got tapped right here. Mitigation. This low got SFP'd for now. But yeah, we are leaving supply behind. So, and this is super local, all pre-New York, so I would not put too much weight on this. But yeah, if this breaks above the supply, then I think it can already make its move higher. But main plan for now is to make a new low, because our current daily low is a bad low. So let's see what we get during New York. And then often on Monday, I'm not too eager to enter many trades, because it's often, it's the start of the week. Statistics still have to be formed. The bias has to be formed. So after New York and after Monday, things will often get more clear. That's the plan. If you have any questions, let me know. For now I'm just observing. I am in a little long from a scalp long. Let's see. But I'm ready to be stopped out of it. Let's see if I had it here. Yeah. Where I took the long on the back test here. So this is my current long. If we get above here again, I'm gonna trail my stop loss to this low. and then look for a short here. This was basically only a potential scalp long to play the relief bounce into a lower high. So I'm gonna set an alert right there, where I'm gonna put my stop to break even. But as said, most likely outcome is that price makes new lows based on statistics and liquidity. So let's see what we get. If you have any questions, let me know. Beside that, wish you all happy and good trading. And I'm excited for the coming week. I think we will get good opportunities. Thanks for watching. Don't forget to leave a like if you love or if you appreciate this video recorded content. And then I have to say goodbye.